Welcome to the Explainer. So what if you could buy into the future of entertainment, but at a huge discount? Well, today we're digging into two deep dive research reports on Cover Corporation. It's a virtual IP powerhouse that some analysts think is just massively misunderstood by the market. Let's get into it. Okay, so this is really the question that sits at the absolute heart of the entire investment thesis for Cover Corp. I mean, a gap this big is exactly what investors are always hunting for. It kind of suggests that the market is missing something big. So you got to ask, where are the numbers to back that claim up? And well, the numbers really don't lie. On the left, you've got Cover, posting a blistering 44% revenue growth. Now look at the right. Its main competitor, AnyColor, is growing at a much slower 25%. Okay, now for the wild part. Look at the valuation. The market is pricing AnyColor at almost 7 times its revenue. Meanwhile, the faster-growing Cover is sitting at just 2.1 times. And that's the 70% discount we're talking about. It's a massive market inefficiency that just begs for a closer look. So, what's the real engine behind all this growth? You know, a lot of people mistake Cover for just another streaming company or a talent agency, but that is not the full picture at all. The real story here is a really powerful business model that's turned into a high-margin intellectual property machine. Okay, this right here is where the market really seems to get it wrong. Most people see the VTubers streaming on YouTube and think, okay, that's the whole business. But just look at the data. Streaming is only 19% of their revenue. The real money, the biggest slice of the pie, is in merchandising, at a massive 39%. See, this isn't a streaming company. It's an IP monetization machine that's figured out how to make money far beyond the stream itself. So how do they do it? Well, analysts are calling it the IP Flywheel, and it's a pretty brilliant, virtuous cycle. Step 1, they create these really unique and engaging VTuber characters. Then, step 2, they build a massive, super dedicated global community around them through streaming. And finally, step 3, they cash in on that deep fan connection with high-margin stuff like merchandise, concerts, and licensing deals. Each part just feeds and reinforces the others, creating this really durable competitive advantage.
Right, so this model has already produced some incredible results in the past, but the story gets way more compelling when we start looking at the future. The research lays out some really clear catalysts for growth that are just on the horizon. First, let's just talk about the track record. A 47% compound annual growth rate. Over 3 years. That is staggering. Let that sink in. This isn't some one-hit wonder. It's a clear pattern of sustained, high-speed growth. So, what's coming up next? This timeline basically lays out their roadmap for creating more value. And we're not talking about fuzzy hypotheticals here. These are tangible events that analysts are watching like a hawk. A trading card game launching for the English-speaking market, major anime partnerships, and of course, the big one, scaling up their metaverse project, Hollow Earth. This is their concrete plan to drive the stock higher. And the potential market they're playing in is just enormous. I mean, sure, the VTuber industry itself is still kind of niche, but Cover is playing in much, much bigger sandboxes. They're tapping into the multi-trillion yen global anime market and, of course, the future of the metaverse. So this isn't some small market play. It's a company with a massive runway for growth ahead of it. Of course, let's be real. No investment is a sure thing, and a high-growth story like this definitely comes with its own set of challenges. It's absolutely crucial we understand the potential headwinds that the research points to. So, the research flags 4 key risks. The biggest one is probably talent dependency. Now, to understand just how big of a deal this is, look at their main competitor. When they lost just one of their star talents, it reportedly wiped out 24% of their entire international revenue. That is a serious risk. Add to that the huge challenge of actually executing on a project as ambitious as Hollow Earth, plus their reliance on YouTube, and you've got the major headwinds investors have to keep an eye on. Okay, so after weighing this really powerful growth engine against some very real risks, what's the final verdict from the research? Where could this stock price actually be headed? All right, the analysis models out 3 different scenarios. And what's kind of incredible here is that even in the pessimistic bear case, the research still projects a 59% upside. The base case, which is seen as the most likely outcome, points to a nearly 400% gain. And if they absolutely nail Hollow Earth and their global expansion, the bull case is just astronomical. It's a really powerful asymmetric bet. And this brings us right back to where we started. The core of this whole idea is a simple market mispricing. Cover is growing faster, plain and simple, yet it's trading at this huge discount. The argument is that as the company keeps executing on its plan, a pretty significant re-rating of the stock is basically inevitable.
So what's the bottom line? When you take all three scenarios and weight them by their probability, the analysis lands on a potential 509% upside. This isn't just wishful thinking. It's a data-driven conclusion based on clear upcoming events. I mean, that's the very definition of a potential multi-bagger opportunity.
So this entire 500% thesis is really built on three main pillars. 1, Cover is a dominant leader with a powerful IP moat. 2, it's diversified way beyond streaming into these high-margin revenue sources. And 3, it is making a massive strategic bet on the future of entertainment with HoloEarth. And that leaves us with one final crucial question. As all this digital IP becomes a powerful new asset class, is the market still stuck using old-school media valuation models? Is it completely missing the immense value being built right now in the virtual world? Well, the research we've just unpacked today suggests the answer to that is a resounding yes.